Vaitheeswaran, member of the Madras Chamber of Commerce and advisory panel of the Government of Tamil Nadu, is an advocate and cost accountant with 35 years of experience. He has authored several books on taxation, his recent book being Taxation of Digital Economy. He has been appointed as a member of the Advisory Council formed by the Government of Tamil Nadu in respect of GST and other matters. As nature leads the way, I request Shri Sridhar, Assistant Commissioner, to welcome Shri K. Vaitheeswaran with a sapling.
Good evening. Being a last speaker, I can see most of your faces that some level of tiredness has set in terms of law, in terms of technology, in terms of AI, in terms of various aspects of GSTN, which you know more than all of us. And I thank the Commissioner for giving this opportunity and a brilliant idea by Chennai Outer Commissionerate to reach out like this. And Commissioner definitely knows what subject to give to whom. So he knows me as a lawyer who litigates, and therefore he gives me a different kind of a topic saying how to reduce litigation in GST. So let me try. It's not an easy task. One advantage of being a last speaker is I've heard all the other speakers, and therefore I will have some comments on some of the thoughts. I've not put them in the slides, but as I come across, if I have to make a point, I would make a point. So straight away, let's talk about input tax credit. The whole GST system seems to be focused on input tax credit. In fact, one of the speakers gave some amazing numbers, 1,200 crores of ITC in a month. Now that will be obviously rattling. So if you look at various assessees claiming ITC, there is a general perception that too much of ITC is being claimed. But we need to understand that GST is a very different ballgame from an industry perspective because it's a bigger basket. The entire gamut scope of ITC has drastically changed. Gone was the excise era where you had an access to manufacture. You had to prove that it went into manufacture, whether a chemical went into paper or not. Then Supreme Court said the disappearance of the chemical is required for the appearance of the paper. So you had all those kinds of battles to fight in excise. But today in GST, the scenario is completely different. Therefore, your scope, your radar, your canvas of ITC is so wide. And therefore, industry claims those credits which they are eligible in terms of the provisions. Availing ITC would mean cost savings, market advantages, price reductions, more penetration to the market, and all the pre-GST challenges are gone. I had to buy from Delhi. If I buy from Delhi, it is a CST purchase. I cannot get credit. My cost goes up. All those things are gone. I can buy from anywhere in the country. I can still get credit. I can import from anywhere in the world and still get the credit of the IGST which I paid. And as the earlier speakers talked about, the same law across the country. This is my 35th year of practice. Therefore, I've practiced from the sales tax days to the VAT days to the excise days to the service tax days to the GST days. And therefore, I remember the VAT days when capital goods in Karnataka would be defined in a particular manner. For example, Tamil Nadu capital goods had a particular definition. Maharashtra capital goods had an income tax definition. Karnataka capital goods referred to capital goods notified by the commissioner from time to time. So like that, each state had their own definition. All that is no longer law. Same law across the country. And one nation, one rate is true. Only thing I would request from the GSTN as well as probably the commissionerates is to probably have a separate program for media on what is GST. Because their understanding of GST is very, very different. They seem to think that GST is one tax collected by the center and then distributed to the state. I've tried to explain to them saying that, look, that's not how it is. There is a CGST, SGST. Some seasoned professionals do understand, but it still goes back. At least the digital media, if you look at it, it's got a very, very skewed understanding of what is GST. Now let's look at the tax administration perspective. The earlier speaker was mentioning about the unscrupulous market that mined the system and created fake invoices. True. It did mine the system. It was there from the TNGST days or KGST days where, there could be second sale was exempted and therefore fake invoices used to create. It is called as carousel trading in Europe. There also the fake invoice exists. World over it exists. So the key thing we need to understand is how much is the percentage of this in the overall ecosystem. If the percentage of this is something which can be arrested through various amendments and provisions and action, coordinated action, well and good. But what happens is when you really send the message that fake invoice is the only thing that is there is a general perception that all invoices could be fake. So therefore, the queries to the recipient is significant, saying that prove your genuineness, prove your bona fide. So that becomes difficult. So some element of technology should be used to understand this profiling. This profiling must be a little more deeper than what it is currently today. Today, for example, one information comes saying that so-and-so is a fake dealer in Chhattisgarh. That fake dealer in Chhattisgarh could also be a genuine seller for some of the goods. He could be a Jekyll and Hyde kind of a character. So 60% is fake, 40% could be genuine, but the 40% is also tarnished in terms of his overall image, etc. Audit, assessment, inspection, intelligence, everything seems to be focused on ITC. So, as I said earlier, nexus to business absolutely wide compared to Senvat and VAD, and because the test is furtherance of business. Now, some of you would have seen this old Tamil film, I'll rasp into a bit of Tamil, where there's this old comedian called Viniradai Murthy. He's standing in the bus stop, and there's another character in the bus stop. So, Viniradai Murthy asks that fellow, Inga bassu varuma? He'll say yes. இங்க நிக்குமா இல்ல தள்ளி போய் நிக்குமா தெரியல. நம்ம போய் ஏறணும்னா சீட் கிடைக்குமா கிடைக்காதா தெரியல. சீட்டு ஃப்ரண்ட்ல கிடைக்குமா பேக்ல கிடைக்குமா எனக்கு தெரியாதுப்பா. நம்ம போய் டிக்கெட் வாங்கணுமா இல்ல கண்டக்டர் டிக்கெட் கொடுப்பாரா, பணம் கொடுத்தா சில்லறை கொடுப்பாரா மாட்டாரா. No, just barrage of 100 questions. Now in ITC these are the questions. Let's be realistic. These are the questions. Why did you avail ITC? Fully valid. No, because you have to prove your genuineness of your eligibility. Why did you not avail ITC is also a question. Now, sir was mentioning about the future where GST 3B would be completely auto-populated and no edit option will be given. Brilliant idea. But today the problem is, every supplier when he files a GSTR 1, it automatically comes into 2B. Even ineligible credits come into 2B. So things which I know, which I'm not eligible for ITC, also is there in 2B, which is a much bigger balance compared to my 3B. I am consciously not taking credit on those things, but the balance is huge, therefore questions are asked. Now, obviously, the problem is not because of the technology auto population. The problem is because of the design of the GST law, where you have 17.5, which is not fully ineligible. Some of them are also eligible in 17.5 based on the provisos and exceptions and things like that. For example, employee related policy, those kind of things are also there. If you're a motor dealer, you can get credit. If you're not a motor car dealer, you cannot get credit. So there are variations in the law. So probably in 3-4 years time, if you want to go into the era where your 3B must be completely auto-populated and you should not touch it, then the GST law must also be simple that everything you procure is qualifying for ITC and there's no block credit. So if that is there, then it would work. Otherwise, edit options may still be relevant. Amounts in 3B more than 2A, amounts in 3B less than 2A, ISD, cross charge, etc. Now, my point from a litigation answer is, questions will be there, answers are important. Assessee cannot say, I will not answer. How can you ask me these questions? You have to answer. If a notice comes, you have to respond. So go through the notice, and the key answer which you should not miss out is on facts. If you have facts to say that I have not availed ITC, please say so. If you have fact to say that there was an error committed, please say so. If you have fact to say that you are eligible for ITC, please say so. Then comes the legal part and then comes the data part. All three are critical in the answers because most of the litigation would be knocked off in those actual responses based on the issues that are flagged by the authorities. So comparing 3B and GSTR 2A is the biggest litigation for 17, 18, 18, 19, 19, 20, 20, 21, 21, 22, 22, 23, 23, 24 also. So these are the kinds of issues that are going on. So I'm splitting into two periods, prior to 1122 and post 1122. Prior to 1122, of course, you can simply do something like this. If you're really serious about litigation and you have the wherewithal for litigation, you can look at contesting in that particular manner based on various judgments. But the easier solution is a reconciliation. See where all you can reconcile. Because this 2A is keeping on changing based on the supplier's compliance. So what was the point of time when the comparison was done by the department and what was the point of time when your answer is given by you? Things could change, data points could change. So you can bring down that gap of reconciliation significantly through data. And if it is still not possible, you have the benefit of Circular 183 and Circular 193, which has been introduced, whereby you can get a certificate either from a chartered accountant or from the dealer himself in certain cases where they have given parameters based on the circular. So you have to look at a pronged route of reconciliation or taking advantage of circular to close the matter. Then obviously your ITC litigation based on comparison collapses. You don't have to really go into a deep fight or deep dispute based on that. Period post 1/1/22. What should you do? As one of the speakers was saying, they had a brilliant system. They got into GST credits on day one. Hats off to achieve something like that. You can't, for that, I know the size of their organization. If they're able to smoothly get on July 1st itself with that kind of 1,000 vendors, it's simply humongous. So obviously companies are now having technology being used for various formats, etc. But most important is know your vendor. Banks talk about KYC. I will extend to businesses. Know your supplier, know your vendor. Of course, you do have a vendor verification, vendor coding, all those things, but these are done by big companies. The middle level small companies don't do most of these exercises. They just take credit, they just enter into a relationship and get into a problem. So monitoring of GSTR 2B and remedial action should be your constant exercise. So you have to do some kind of visibility, understanding your supplier profile, vendor profiling is needed. We implement what is called as a green, red, amber categorization. What is green, red, amber? I have all kinds of vendors: raw material vendor, manufacturer, machinery vendor, service contractor, canteen contractor, labor contractor, job worker, goods transporter, GTA, GTO, warehousing, so many service providers, so many suppliers, all those things are there. Now, what do I have to do? I have to do an analysis. Green is the fellow who's a good guy. He will file his returns, pay his taxes promptly, respond to your emails, respond to all your queries, deliver on time, pakka assassi. You have no problem with green. Red is a fellow who will disappear at the drop of the hat. He will come one day, supply one day, not talk to you, poor quality, will not respond to emails, will not respond to queries on taxes, queries on returns, etc. Very difficult to deal with. Amber is the fellow who somewhere in between grumblingly complying with the tax. So you should look at green and making amber green. Red you should avoid. You can't, sir, this is critical. This job work is critical to my business. This raw material is the most key raw material of business. I have to buy from him. Buy, don't take credit. Simple. You have to deal with him. For example, in one of the clients, we told them, stop dealing with this vendor. He's delinquent, he is not complying with you. Why do you still deal with him? Sir, he's my managing director's machan. If I stop buying from him, my job will go. Then I said, please buy from him, but don't take the ITC. If you take the ITC, you're going to drop. So it's a cost. So ultimately, as a CFO or a manager taxation, you must take prudent decisions to ensure that the company doesn't suffer later. So this kind of vendor profiling, definitely industry should start doing. This is not only meant for big guys, MSMEs, middle segments should also do. In fact, I would simply say, if your big buyer asks you certain questions, you ask the same questions to your supplier. We implement the same system. You may not have the wherewithal of their consultants or advisors, etc. But the big buyer will tell you so many things to do. You ask your supplier also to do the same things. There will be a cleaning up of the entire system from a GST perspective and a compliance perspective. Now, block credits. Till the day which we remove 17.5. In fact, I agree with the first speaker. Why do we need block credits? One of the philosophy behind block credits is that, look, you're constructing and creating an immovable property, and therefore there's a break in chain. But you're renting the immovable property, and therefore you're getting revenue. You're using that factory for manufacturing products on which you're going to pay GST. Therefore, maybe lawmakers can think of a capital service with a deferred credit. We have inputs, we have input service, we have capital goods. Why not think of a capital service with a deferred credit so that the cash flow issues of the government is addressed, but the cascading effect is not, going on. Let's look at some kind of solutions till we come to a point of time where we can completely get rid of 17.5. That's not easy. Maybe in 3-4 years time it can happen. But till then, you need to understand the scope and ambit of 17.5, and ITC should not be taken. If the provisions are not even applicable, then ITC can be taken. Wherever there is a debate, I can take, I cannot take, then it's your call. It's a commercial call, it's a consultant's call, it's the assessee's call, depending upon their appetite for litigation, or they don't want to litigate, it is their call completely. So proactive approach, it is not a simple law. We have to accept that. Change in law is effected through amendments in the Act. And the amendments in the Act are effective from different dates. That's also critical. That is also because CGST Act amendments will have to need matching SGST amendments, which will take time at the various state legislatures, and then the notified date has to come. Whereas the IGST Amendment Act is a little more faster. Notifications, you have central tax rate notifications, you have central tax CT. There are voluminous, humongous number of notifications. There are special notifications like for real estate. Then you have rule amendments. Then you have removal of difficulty orders. Then you have circulars. So I'll put it like this. Arise, awake, says Vivekananda Swami. In the context of GST, aware, arise and awake. So you must be aware of things and always be alert. And I think everybody has talked about this commissionerate by saying that our commissioner has been proactive in holding meetings and communicating the changes in law and discussing with the associates. That's the biggest thing you can do. That's the best thing you can do. Let me be candid. Big companies have advantage of professionals like us. MSMEs get some information here and there, but the smaller players trust only WhatsApp. Their source of knowledge and disinformation and information is WhatsApp. In fact, they call, say, sir, if you buy for 1,000 rupees, it is 5%. If you buy for 5,000 rupees, it is 2.5% GST. Abdi unnu irukka, sir? Nammalla irukaduma. Where do you get all this? No, I read in WhatsApp. Just keep it away. So this information is so critical today. Therefore, the government should probably look at simpler communications, including vernacular communications. When you say everybody is in the GST chain, there are a lot of vernacular issues that are coming up. English is not the only mechanism through which you can communicate. There are ways to reach the assessees through vernacular mechanisms. Given the complexity of law, there are cases where audit facilitates course correction. When audit comes and points out, you have made an error, this is not actually 5, this is 12, it actually gives you a window to pay. And section 73, 74 are all designed whereby you can even pay the entire taxes which you clearly agree that is payable with applicable interest and avoid a show cause notice. There are a number of cases where the assis have taken advantage of this and paid the tax and interest. But the section says show cause should not be issued. If that part of the bargain of the section is also upheld and section is show cause notice is not issued, then there ends the matter. Plus 73 and 74 has got designed by itself. After reply also you can close the matter. After order also you can close the matter. So the law itself gives you a mechanism for closure of matters in case you feel that it is not a worthwhile matter to fight. Appeal time limits are important. Many people in the businesses don't understand there is a time limit. 3 months means 3 months. There's a 1 month coordination period. No, sir, he said he'll change. I'll wait for the change happens. No, all that will not happen. The order is already uploaded. You have to go on appeal. And there is a pre-deposit requirement. That pre-deposit also has to happen in time. So all those things are all system driven, and it is, see, there were many assessees who were in the old system who knew all this. But there are new assessees who have first time come into GST, who had never been in VAT, who had never, because VAT was exempted for many of the commodities. They never knew this. They were never more than that threshold limit for SSI for excise duty. Therefore, they were never excise duty complying us. They were on the excise radar or VAT radar. So these are the new assessees who don't understand these things. So probably again, 8 years is a long time for them not to understand. I agree, but it's still required from a compliance perspective. In-house accountants, tax department, you have to ensure that the ITC must be as per the act and rules. If the supplier is dodging or not paying taxes or not filing returns, early identification, remedial action is important. Reconciliation is the key. Notices are issued. Our earlier speaker was talking about 1B, 1C, etc. Those things keep coming based on these comparisons. You cannot avoid that. You have to meet those timelines. 7 days means 7 days, 15 days means 15 days, 1 month means 1 month. Where legal responses are available, facts are the key. Documentation, paperwork, trail is absolutely important. And e-way bill it's a roaring success. The earlier speaker talked about the mind-boggling numbers of how e-way bill has grown. It gives you transparency for the business also. It tracks the system. It gives you complete mapping of your business and where you're going. And there is no room for error. Let's be clear on this. There is no room for error in the e-way bill. We have to coach the transporters or people involved in the logistics supply chain saying that you can't afford, because every single mistake can result in detention of goods somewhere in the middle of the country. There will be delayed delivery, customer challenges, detention costs, penalty, filing the appeal in the other state, cash flow. Biggest thing is cash flow. So these are all challenges which you would face, and to avoid all that, if you can implement systems, to ensure that errors don't happen. And by now, you know what are the types of errors that happen e-way bill. Part B is not filled up, one data is not filled up, vehicle number errors can happen. These are things which you can know. So you can customize and ensure that these errors are not happening. Like the Sriram was talking about, you can have AI tools to ensure that these things are all tick boxes so that you don't make errors. Now, going to the second part of my topic in terms of aspirations, these are, in my view, 5 reasons why India implemented GST. Tax reform, eliminate cascading effect, bring equitable taxation system, bring a simpler system, and have one market. Now, let me do a scorecard and see whether you have achieved these things. Tax reform, 100% yes. Industry, government, consumers have all gained. Elimination of cascading effect, largely yes, but ITC being blocked is one item which is still under debate, or orders denying ITC, cascading could be high. That is only one area which you have still an issue. Equitable taxation system, entire supply chain is taxed till the consumer point. Incidentally, US does not even have VAT. They still have a use-based sales tax. So if you go to Boston, people won't buy in Boston. They'll go to the next state and buy goods because there is a lower rate of tax and bring it to Boston. All the malls are on the outside side of Boston. So, there are countries like US which does not even have a VAT, but we have gone through VAT, we have gone through GST. Simpler system, it was intended to be one, but has turned out to be complicated. The law is quite a complex set of mechanisms. One market, absolute yes. GST rates are across the country. You can supply to Gujarat without risk of loss of tax rate in Gujarat. Advanced rulings. It was designed well, but unfortunately, it did not achieve its purpose, largely because of the way it was construed. It was not a judicial body. It's not having a Supreme Court retired judge or a High Court retired judge, which will have a different dimension completely. Like the original income tax advance rulings. The original income tax advance rulings was headed by a retired Supreme Court judge. That made a big difference in the type of rulings and the binding effect of those rulings. Maybe we can look at some kind of change in the law. As I said, for industry, harmonization of taxes, cascading effect is gone. ITC has really gone up. Most businesses have eliminated unwarranted business structures. You know how much of advantage you have in GST. In the VAT days, if I have a buyer in Maharashtra, the buyer in Maharashtra will tell me, sir, you're going to supply in CST. I don't want to buy from you. I'll buy from a local supplier. Now I want that business. What do? I open a depot in Maharashtra, even though my business does not warrant a depot in Maharashtra. I will do a stock transfer to Maharashtra, and then Maharashtra will supply local MVAT so that I retain the business. Look at the cost increase, look at the structure complications which have happened. C&F agents have almost disappeared from the system because of GST. So a lot of business reforms have happened. Unwanted business structures have been eliminated. Better supply chain management has been implemented. I can supply from any part of the country, and vendor verification has really made businesses more efficient. Consumer. Today's consumer knows everything about GST, wrongly or rightly. Remember those days when the early GST came, you used to go to a hotel, take a photo of the vada, and then take a selfie of the vada, and then put that bill in the portal, Twitter, etc., saying GST is so costly, then vada, etc. All the drama they did. So consumers' awareness is huge, which also brings in a negotiation point in pricing also. So you say, how much is this? Why are you charging it this? Earlier systems had VAT in the invoice, but excise duty was built into the price. Service tax was built into the price. CST was built into the price. So they saw only VAT. They never saw any of the other taxes in the invoice. This is what is called as sticker shock. So in GST, everybody says 18% is very high. Why is India taxing 18%? Look at Singapore, it is only at 7%. Singapore took time. Singapore is a small island. Chennai is bigger. So 18% is still a good rate in my view, compared to 37%, 39%, which was there if you calculate the effective rate of tax. 28% is an area where we can discuss and debate what items should be in 28, what items should not be in 28. But 12 and 18 are actually reasonable rates that we have across the country. So I don't think that we should break our head too much saying GST is costly. You should remember what was there before, because we never saw those hidden costs. Now we are seeing only this item in the invoice. And India should take pride in the fact that when we implemented GST, there was no inflation because of GST. Every country which has implemented a GST kind of a reform faced inflation. Malaysia withdrew its GST because of unpopularity. Somehow we cracked it. I think great credit goes to the powers that be. the GST Council, the center and the state, and all the officials who have sat through it and ensured the calibration was rightly done so that the impact of inflation was not there. Otherwise, what would have happened? Public outcry, all that would have happened. So we need to give the credit when it is really due. So really phenomenal reform in that, and it's a one indirect tax levy, no doubt about that. Government, entire SSC page has opened up, new SSCs, widening of tax base, data mining. They do so much of data mining, they can track transactions, they can do audit trail, revenue collected from multiple SSCs, e-way bill leaves a trail, e-invoice gives you a trail. Consumer awareness also helps the government. Many states have shown increase in revenue. The compensation was based on a 14% growth, which is a bigger number to achieve. When Mr. Jetli brought the states together, it was the selling point. The selling point was compensation. So 14% based on your earlier tax year-on-year growth. But if the country is growing at 6.5 and 7, 14% tax year-on-year is not so easy. Therefore, the compensation is also a big discussion that is going on. And of course, some of the states face losses. Manufacturing states face losses. We expected them to face losses. They did face. Gujarat, Maharashtra, Andhra Pradesh are all big manufacturing states. Tamil Nadu, Maharashtra, Gujarat, Tamil Nadu are big manufacturing states. They did face losses because they export the goods from the state. If you take Kerala, they import the goods into the state. It's a consumer state. So each state profile is different. And when compensation cess was contemplated, it was contemplated for manufacturing states. But then COVID happened. So every other state also had losses because of COVID. And therefore, they also made a claim for compensation. So it's a big debate by itself. We'll see what happens in the next set of meetings as to how we go forward. Going forward, taxpayer aspirations, GST Appellate Tribunal has to come. It is there in the Act. It is there in the procedure. It is there in the technology. It is everywhere except in action. So we need that. 8 years on, we just cannot wait. There are two reasons why. An appeal is decided in favor of the assessee. Revenue wants to go on appeal. It cannot. An appeal is decided against the assessee. He wants to go on appeal to get clarity. He cannot. But ultimately, if he loses the case in the tribunal, the interest from that date to that date will be humongous. So we need that closure. And as one of the earlier speakers said, certainty in taxes is important. Why should we have so much of complexity? Why should we break our head on milk beverages, beverages containing milk, with this with the soda, that without soda, all those things? Why should we make it so complex? We can make it simpler. 5 minutes. Finality of judgments and no retrospective amendments. This is our Prime Minister's wish also. If you have seen many of the statements of the Prime Minister as well as the Finance Minister, we don't want retrospective amendments. At least if you want to change the law, change it prospectively. Now, there is one more reason why I'm going to pick this point. We are no longer the old India. Old India, this changing the law to get due the taxes, get back the money was all a big aspiration. We are a new India. We were the 5th largest economy, and a week ago or something, we became the 4th largest economy, though some people doubt those statistics. We aspire to become the 3rd largest economy by 2030. A country which is 5th largest or 3rd largest should not be focusing on retrospective amendments rather than looking at certainty of law, because that's how other developed countries deal with it. I have not come across a country which do retrospective amendments to tax laws to collect or nullify their own apex court judgment. We should respect our judgments also. This way or that way, we should look at it in that form. And AR should be a judicial body, which I made an earlier point. Somebody was saying that it is good that we change the law. I have a different take on that. Law must be allowed to settle down. You have one amendment in a rule, within 1 month you amend that same rule again, within 2 months you amend that same rule again, then you lose track of it. So there could be reasons for it, but I'm saying that allow something to settle down and then do the amendment after a lot of things. Because you touch one provision, it may have a ramification elsewhere. So a holistic approach should be looked at. And in some cases, it may be better to circulate the draft amendment rules and invite suggestions. And here, assessee has to play a big role. They can't keep quiet and then say this has happened. When there is an option like this, for example, take the Digital Personal Data Protection Act. The DPDP rules have been given for circulation, and number of meetings have been held by the MEIT ministry to discuss what kind of changes can be made. So it can be given to the public for some kind of feedback, and feedback is important. One nation, one tax, one assessee, one AO, one assessing authority. It can be state or center, you decide. You draw a line. let it be one assessing authority so that there is finality. Because you have this cross-empowerment issue, you have this debate on Section 6, all that can be avoided if you can implement this, because ultimately, whether it is state authority or a central authority, both CGST and SGST will be collected. So there is no loss of revenue to either of them in terms of one authority looking at it. And intelligence sharing is so common. Just like how income tax department shares data to GST department or GST shares data to income tax department, there is a lot of sharing of data by state and center. So today the communication channels are all open. Plus they meet so regularly in the council. So it need not be an issue. Even if somebody falls in the central jurisdiction, state can share the data, or somebody falls in the state jurisdiction, center can share the data, so that tax evasion is addressed, leakage of revenue is addressed, and things are smoother. Classification disputes, what is the cause for classification dispute? We should understand the root cause. The root cause is, you look at customs tariff. It is HSN driven. You have 8-digit codes, elaborate descriptions. Central excise tariff matched it almost, therefore it was going on. VAT was based on language, not HSN, English language, description of goods. So when we merge GST, we merge the VAT and the customs tariff together in 1/2017, 2/2017. Therefore, the language used in the box may not match the customs tariff, which leads to disputes, whether notification applies or not, etc. So some kind of analysis needs to be done. I think there's a fitment committee which looks into it. Some kind of analytics should be done to see where all we can make changes to 1/17 and 2/17 to align completely with the tariff, so that you avoid this classification disputes once for all. And in the longer run, the remedy for avoiding classification disputes is to bring down the rates of taxes. You can't have 7, 8 rates of taxes and not have classification disputes. You will have. So bring it down to probably 3. That takes time. Of course, it takes a lot of willpower also on the part of the assessees to accept that kind of a system, because some of them could go up into the higher bracket, some of them could come down to the lower bracket. But I see it happening. I'm not saying I'm not going to rule it out. Probably, in my view, next 3 years it will happen. This 8, 11 rates and all will collapse into probably 3, and that would be very simple, because you'll have an exempt, a lower rate and a higher rate, and that should really take care of things going forward. So with this, I will say thank you, and thank you very much for this opportunity and a patient hearing.
It's now I request our Commissioner to present a memento to our dignitaries and esteemed speakers of the day. Shri K. Vaitheeswaran, member of the Madras Chamber of Commerce.